Good afternoon, my fellow crypto traders and all you traders, actually. I've got a lot more followers recently since I've been covering market data, inflation, the dollar, etc., that are not just crypto traders. So I want to welcome you all to this weekly update. Let's get right to it. Got a lot to cover, so I'm not going to delay anything here. I've got 20 minutes for TradingView people. This right here is our U.S. inflation rate. And let's actually move it into a bar chart real quick. Columns. Yeah, that's good. Zoom in. And you can see that in June, we reached our peak at 9.1% inflation rate. Inflation has been coming down every month steadily since then. July came down to 8.5, then 8.3, and our last report, which was on Thursday, indicated inflation was at 8.2%. So inflation is coming down. It's just not coming down as fast as we, the market, or the Fed, for that matter, would like to see it. It will come down. I promise you that. It's going to come down one way or another. Now, we have two enemies of inflation right now. Disinflationary data, as I've mentioned in previous videos, whether it be Chinese freight, used cars, housing starts, energy sector, utilities, oil, gas. Those are all coming down very fast. I can just jump to one of these charts for a reference. Let's just take a look at U.S. oil. You can see, let me take it out of the bar chart here. We'll put it back in candles. We were in this channel up, put it on the daily, zoom out, and we broke below this ascending channel, formed a descending channel. That's this red descending channel here. And ever since approximately June, energy or oil prices have come down. All right. Now we came back up and did a patent technical, this is what we like to see, us technical analysis, a retest of previous resistance in that channel, and are now coming back down. It looks like a support level I've got drawn out here. Will we break below that and continue down? Remains to be seen. The point is, on a long term, energy prices are coming. Everything is going. We have got disinflationary data all over the place. Every chart I look at, single family homes, everything is coming down very fast. At the same time, the Fed is raising interest rates faster than at any period in history. All right. So we have two opposing factors of this inflation. And I know it's going to come down even if the Fed does nothing. Typically, the Fed raising rates, taking liquidity out of the market, has kind of a lagging effect. Excuse me, I still have a little bit of a cough. And typically, that's not priced in till at least a half a year to a year down the road. Now, the Fed will take credit for inflation coming down, but is that really the reason inflation is coming down? I would argue no. I would argue that all of this disinflationary data, which we are seeing, here's utilities. Look at this, guys. Utilities have just been a massive crash. And energy leads many times the S&P. And we have been in a secular bull market ever since 2009, as indicated here by our utility sector. We have remained above this trend line since 2009. And look at this massive crash in utilities, guys. We have just come down, almost touched that trend line once again. And if we break below that, that's when I would suggest, now this over here is, of course, 2020. That's an anomaly, doesn't count. I would suggest once we break below that, that's when we enter a secular bear market. Energy likes to lead the market. That's why I have XLU, or utilities, over SPX here. And you can see here, I tested a resistance zone and has come down. All right. Lots of different things, guys. I could review these charts ad nauseum once again, but we don't have time to do that. I'm just saying that the disinflationary data, wherever you look, I mean, U.S. housing starts, for example, again, it went to a bar chart. I don't know why it's doing that. I'll put it in line mode. We have come below both of these trend lines, which were started in February of 2011. All right, that's not a good sign, guys. That is not a good sign. Single family homes, same thing. Gasoline, etc., etc. I can go through all of it. Here's gasoline. Come below a trend line. Well, that's on the, let's go to the daily. Let's stick it in candle mode. Starting on that inflation chart messed me up. Apparently, everything has gone to line or bar. All right, so you can see here, this is a trend line we have broken below on gasoline futures. All right, so this is all the disinflationary data that I like to factor in. Now, if we have this in combination with the Fed increasing interest rates at a record historical pace, it's going to be bad for the future. It's not going to bode well for the future. All that being said, even though the markets have gone from factoring in a rate hike of 75 basis points in November, from an 84% probability to now a 97% probability, meaning that it's almost fully factored in, the markets have held up very well. Let's take a look at our US 500. I have two lines here. These are both supports. The first line is where I thought we would bounce off. I created this W pattern or double bottom. Talking too fast today. Double bottom pattern several weeks ago, if not months ago. And this is my expectations. Of course, I have a little bit of technical analysis drawn in here. This is Elliott wave. This is wave number 1. We crashed number 2. Number 3 is longer and more extended. We come down to number 4. This is where I think we're going to bottom on number 4. And number 5 tends to replicate or mimic wave number 3, and sometimes is even more long and extended. Those of you who are Elliott wave technicians, correct me if I'm wrong. I'm not. I admittedly am not caught up on Elliott wave. But this is where I am charting a blow off top. I think we reached at least the previous highs in November of last year, but my expectation is 5,000 to 6,000 before we come crashing down and come crashing down hard. Now, why do I say we come crashing down hard? Because that's when the Fed rates will start to impact the markets. What's impacting the markets right now is disinflationary data. I know the Fed's going to take credit, and maybe in part they can take credit, but really the impact of what they're doing has such a lagging effect. It really doesn't impact the markets until a year down the road. And that's why I say come mid 2024 or end of 2024, that's when we're in real trouble if the Fed keeps doing what it's doing right now, which is raising interest rates very rapidly and just swallowing up, just exacerbating liquidity in the markets. Okay, so all that being said, the markets are holding up very well considering they're factoring in this 75 basis point rate hike in November. One of the charts I've been looking at this week, and many of you who follow me on my website or Twitter know that I entered a trade yesterday when Bitcoin was at 18,300. Everything looked to be crashing, even the US 500 or S&P. We were down here somewhere on this wick below our lower level of support, and that's where I entered my Bitcoin trade. What made me so confident that we were going to have this reversal candle, this bullish engulfing candle? What made me so confident when everything was crashing was this chart right here, guys. I posted this earlier this week. This is regional banks. While everything is crashing, take a look at this massive bull run that regional banks are having. In fact, if I zoom out further here, you can see I have drawn here a bullish triangle. And we've broken to the top side of that. Broke out once as kind of a bull trap there. Came back down into the triangle. That was kind of a bear trap. And then took off again. This tends to be where smart money takes a look, or keeps their money even. And look at what regional banks are doing. They're just going off. All right. Do they know something the rest of us don't? I think it's a valid question. I think it's a question we have to ask. Right now we're coming up into some sort of resistance here, guys. I don't expect us to break straight through that. That will be a point of resistance. So I expect regional banks will draw back a little bit here, at least to this trend line. But it's possible that we break this trend line and come down and retest. Actually, I would love to see that. That's perfect from a technical standpoint. The top of this bullish triangle right here. All right. And so look for regional banks not to just break straight through this resistance. This resistance comes all the way back. We have several good touch points here. A pivot here in February 2020, a pivot here in May of 21, another touch over here in January of 22, and now we're touching it again. So regional banks are very strong. This is kind of the chart that I have been using as my lead indicator, and why I was so confident entering a 5x leverage long on Bitcoin yesterday at 18,300. All right, dollar continues to do as expected. I think in the last video I told you I thought we were going to do an M pattern here. We are in fact doing an M pattern. All right, until we break to the top side of that resistance. Where's that resistance coming from? From all the way back in 2009, guys. We've only touched that. This is now the third time since 2009. As long as we remain on the underside of that, we are in a secular bull market, right? Here's a touch point here in 16, and finally up here. So I don't expect, even if we were to touch this again, come up here and test this again, that we'll break through that. That's a lot of resistance. In fact, what I think is going to happen here is the dollar starts to dump. Why does the dollar starts to dump? I don't know. But look at what regional banks are doing. Regional banks are taking off. They lead the way. Regional banks will lead the market in a bull run, and they will lead the market into a recession. We watch the banks when we want to know what the rest of the market is going to do, along with the energy sectors. We watch all of those things, but this right here is my key lead indicator. VIX is also performing an M pattern. Can you guys see that there? All right. So right here, we touched the top of that megaphone pattern, touched it again, and now fear is coming down. Why is fear coming down? Makes no sense, right? I mean, we're on the verge of nuclear war, nuclear fallout. Half the world will be destroyed, and yet fear is coming down. It seems like this measurement here may only be a measurement of the markets, but obviously geopolitical situations do affect the markets, do impact the markets. So I think it's tightly correlated with dollar price action and regional banks and what smart money is seeing and doing with their money. Who's dumping the markets right now? Who's got the greatest amount of puts in the markets? The retailers. What is smart money doing? They're buying it up. And that's a whole different video. I can do a separate video on that, but that's where smart money is going. All right. I did show this chart. I'm not going to get into that. Let's jump to our Bitcoin chart because I have 20 minutes here and I'm going to lose everybody if I keep rambling on. Is this my Bitcoin chart? I want to show you. Yes. Okay. So here's a little bit of technical analysis on the crypto side. First of all, let me zoom back out here and see this larger year-long bullish descending wedge. Yes, that is a bullish descending wedge. All right. So we have come down several times and touched the bottom side of that. We like pairs of threes in these triangles. I guess we could count this at least 2 times over here, and this would be another touch at the bottom of the triangle. It's possible that this is over here is only, this whole mess is only counted as 1, and this is 2. And in that case, we should have come down again, but we have broken to the top side of this descending wedge, this bullish descending wedge. That is bullish in and of itself. However, we have several other bullish factors, which if you're following me on Twitter or on my website, I put those out there. Let me see if I can bring up my clipboard. Yes, all right. So I have that in. Let me see if I can paste some text here. And Control V. Hello. There it is. All right. So from a technical perspective, everything really I wanted to see, check the box, has happened. So we exited the top of this year-long descending wedge. We formed another short-term bullish wedge. That's this wedge right here. All right. We're inside of that, but we're testing the top of it. All right, we have retested our support zone. See this red zone right here? That's a support zone. When you break outside of these wedges, I like to see us come back and test the top of that. That's healthy. We want to see that. I wanted to see this drawback after we broke to the top side. All right, and we got that. We tested this critical support level here. All right, this critical support has never been broken and confirmed. That's at 18,700. We've touched that 5 times now. It has not been broken, and it has not, well, it's been broken, but it's not been confirmed. All right. And we also tested right here, perfect touch and go, at this lower level, 18,140. All right, so those are all those from a technical perspective are absolutely beautiful. That's what I want to see from a technical perspective. So I knew once we touched this 18,140, I better get in Bitcoin. And I did. I got in at 18,300, 5x leverage. I'm still in that trade, by the way, guys. And those of you that want to know what I do with it, follow me at my website. All right. But from a technical perspective, these things are playing out. Now, what we're watching here, guys, on Bitcoin is we want to see the break to the top side of this bullish wedge, which is just outside of the longer year-long bullish wedge. We've got all these things checked off now. All right, we've got all these things. Now we just want to see confirmation of a break to the top side. All right, and at one point here on the RSI at this red circle, our RSI was up there and testing that green ascending trend line. And that was looking bullish too. If we can get above 50 on the RSI, we're on the bullish side of things. I imagine we'll be on the top side of this triangle as well at that point. All right. I don't think I'm going to get into much more in this video for the purpose of this weekly wrap up. This is just showing you what I'm looking at. So let me do a long-term synopsis here. For the short term, I think Bitcoin is actually looking relatively bullish. For the midterm, meaning 4 to 6 months, I see the stock market, which is going to lead our crypto along. I see the stock market actually being rather bullish, irrationally bullish, yes. Undisputedly, it makes no sense why the VIX will be dropping and why but the markets often are irrational. And when all of the retail investors are heavily vested in shorts, the put to call ratio is insane right now, and most of those are retailers. I can almost always bet that the market makers are going to take advantage of that ratio and just really squeeze those shorts hard. All right, and that's another case for bullishness in the next 4 to 6 months with our blow off top. All right, should we break below that support on the US 500, I would have to take a step back and reconsider. But for now, that's my midterm projection, 5 to 6,000. At which point, all of this disinflationary data, along with the Fed hikes, which are insanely just too much, I think, guys. It's going to catch up with us. And I think that puts us into a recession in the long term, takes us out of the secular bull market and into a secular bear. All right, so I just want you all to be prepared for those trades. And if you can see kind of what my perspective is in the long run, you can set yourself up for success in those areas. All right, until the next video, guys, peace. I'll talk to you later.